Oh, this is Jordan. This video is being recorded on the afternoon of Wednesday, December 13th, 2023. Thank you so much for tuning in. And in this video, I'm going to talk about, quite simply, gold against the stock market. And looking at this chart, this thing has been really weak recently, even though in nominal terms, gold has been stronger. So we have a bit of a divergence. Gold actually closed today at 4 p.m. at 2040. So this data here is before then. It's as of a 1 p.m. Eastern close, I believe. If gold is able to, hold above 2030, at 2000 to 2030, if it holds above that moving forward for the rest of the month, that'd be really encouraging. And of course, we know that rate cuts are probably coming in 2024, and the assumption is that that's going to be bullish for gold, and it is. But if the economy is in a soft landing and there's rate cuts, gold can still break out, but this breakout move based on that, it will peter out. You're not going to get the huge move to 3,000, 4,000, unless the economy rolls over, the stock market rolls over, and you go into a recession. So just going back, the bull markets we had in gold, of course, you look at the 2000s, you look at the 1970s, those are real bull markets, confirmed by gold outperforming the stock market. This was the last solid period for gold, but this is really a cyclical bull. Miners didn't do that great because the COVID crash, but gold only declined here in the COVID crash. I think 12 or 13% at the absolute most. But anyway, you had this, I think it was like close to an 80% move from down here up to here. And you did have corresponding strength in gold against the S&P 500. You even had, I probably did a video about this. So looking at the equivalent to the 40-month moving average, this is a good indicator. Rally here that it failed. 2016, it fails here, fails a couple times. Then here, this was surprising. We thought that this was really the beginning, and even with this here, you would have thought that this would hold up better than it did. And so here, this is concerning. Looking at this right here. 40-month moving average, it's sloping down. This also failed at the 200-day moving average, by the way. So you see this struggle here, and you have this support here. So, master of the obvious, it could break down like that. Or, maybe it stabilizes here, and eventually they cut rates because the economy's weakening, and that's a problem. Then you get this move, and that's a real bull market. But just looking at it by itself doesn't look good. And so, again, Fed cutting rates just in a vacuum, that is bullish for gold. But if they're cutting rates because it's a soft landing, it's not going to be that bullish for gold. It'll be much less bullish than typically. If they're cutting rates because the stock market is rolling over, there's real recession fears that are emerging, and, which I'll get into in another video, the yield curve is steepening. You get that signal where it shoots above zero because the 2-year is plunging, and it did plunge today. That would be good for gold, in that environment when they have to cut rates because it signals a recession. So that's where we are. Strong recovery today in gold. Good action. We'll see if it sustains itself, but got to pay attention to this because it's not confirming the recent strength. I don't want to overplay it, but it's just something important to keep in mind. But then again, if we're going to have a recession next year, no matter how shitty this looks, it'll make a move like that. That's all for today's video. Keeping it short. Let me know what you think in the comments. I'll talk to you guys again in the next video.